I have not talked about the non-random chart patterns yet. I would like to talk about them briefly. Let me gather my thoughts and I'll come right back on. So I'm just going to talk about them. I have three courses built out. First, what are non-random chart patterns? Non-random chart patterns are chart patterns like a head and shoulders, or inverse head and shoulders, or a double top or a double bottom. I might have an example that I could show you via Google search, but they're usually patterns that you identify visually. But your goal is to not rely on your own visuals, although you could be very good at it. You want to automate a computer algorithm that can approximate it the way you would. So in 2000, there was a groundbreaking paper that developed the technology to do this. And that's what I did on my dissertation. So I replicated that paper and improved the technology with my dissertation advisor. And the version that I defended did not talk about profitability. And we, in the last few years, have addressed profitability. So if you're not a finance person, then maybe you want to look at the beginner day trader course to learn more about technical analysis before you come to this video. I think if you understand technical analysis for the beginner and the intermediate day trading course, then this video is for you. Especially if you also understand the famous investor portfolios, through the beginner and the intermediate, or at least you're in the intermediate for that. So the profitability is going to say, what does price do once the pattern's complete? And we measure that based on the return one period after the complete pattern. I don't know if I want to get into the full methodology, but visually you're looking at, each pattern has its own geometric shape, right? And the way you teach a computer to learn it the way a human would, you have to, use some math and you have to use some restrictions, but ultimately you're testing what does price do after this pattern is complete. And the CMT Association, that's the body that deals with the exams for technical analysis. They have called for more automated testing and more rigorous testing of these patterns. They also have talked about in their curriculum that when a pattern fails to break, you have a head and shoulders pattern. So there's two types of patterns. There's one that when it occurs the price drops, and the other is when the price goes up. But if you have a pattern where the price is supposed to drop and it doesn't, then those actually become the most profitable buying opportunities. How do you know that's going to happen? I'm sure there's a way to tell, like, it's a head and shoulders, but so adding volume into the mix usually is going to increase things. If you add volume and you're looking at the price to drop, it'll drop more. So I have just a very quick update. One is that I worked on the profitability aspect of it, and I have some results. So what I want to do with the courses is, the beginner course, I want to show the technology at a very basic level in Excel. So how do you teach a computer to recognize the patterns? And if you're not a computer person, you're a finance person, don't get scared away. It's really easy. If you're a math person, but you're not an applied person, I can teach you that. And, like I can with the beginners that don't know finance well, and the famous investors. Now you're a finance person that understands the famous investors, the beginning and intermediate technical analysis patterns, but now you're looking at like bridging the gap between just finance and then like computer science. And don't get scared away. I'm not gonna, make it something you can't understand, because I was that guy. When I finished my MBA, I didn't have the most rigorous background, and I had to take a computer programming class to start my PhD. And I learned, how to do some of this stuff. And throughout my PhD, I continued to learn it. and it was something that I wanted to work on the whole time I was in my PhD. So I have an Excel spreadsheet that just walks down basically like, so you have to look at these patterns within a fixed window. And the window size, obviously, you can change it, but in the paper that was groundbreaking by, they in 2000 looked at like 350 stocks, and they developed the technology based on mathematical properties that would allow somebody to mimic the way humans see and process information the way, a computer to see and process information the way a human would. And so you have the price, and this is your Head and Shoulders, which looks like the Head and Shoulders we just saw, but the computer's seeing it like this dashed line. So the technology that would produce that dashed line is what you want to learn how to do if you want to recreate these portfolios on your own. Um, so when we see this pattern here, we're looking at these inflection points, and our eyes are doing all that math and all that smoothing for us. They're just viewing this image as like a big grid, and they're looking at where, there's an inflection point here that's a top or a maximum. Here's another maximum, and here's another maximum, and what's in between that? We have two minimums. Our eyes do that for us, and we just focus on the maximums, but they alternate. You remember from like elementary school, you've got the alligator, and like 8 is bigger than 3, and then you got the other one, which is like, uh, 3 is less than 8, or 8 is, you can do it whatever way you want. But, when the inflection is on the top, then it's showing you that, the sign, if I can talk about calculus for a minute, the sign of the, second derivative is negative, and the sign on the bottom is positive. So, these maximums and minimums are just simple rules, but how do you get to them? Price is always changing direction. So how do you know what direction to use? Well, you want to smooth it out, which is what this is doing. It's showing you, here's the smooth price changing directions. And so the Excel spreadsheet is going to break down for you how to basically view the prices in a fixed grid, which is a matrix of like, 38 days by 38 days. Where do I get the 38 from? It's from their paper. That's what they tested. They didn't test profitability. They just showed that you could learn the patterns and that there's informational content. So that's what we did. And the spreadsheet is going to get your technological skills there, and it's just a one-time fee, and I'll let you download it, and I'll walk you through how to use it, and I'll walk you through how to apply the rules over it. And then to take it a step further, I'll go through a more full-fledged package system that uses Mathematica. You'll have to get Mathematica, but it's like $200 a year. And I'll show you, like, in Excel, how you can take stock prices and put it in Excel and figure out whether it's a pattern or not. And that's a very slow way of doing it, but you'll do that in the beginner version. In the intermediate version, I'll give you a Mathematica program, and you can use the R programming language inside of Mathematica to automate the smoothing process for you. Now, my advisor, he was very technically savvy, and he rebuilt that package in Mathematica so it runs on its own. But you can, you can you can run the smoothing technology in R very, very fast. And so that's what we did to start. And I initially did it inside of Mathematica to start. And the advantage of Mathematica is that you can run more stocks at a time. So if you want to run more than one stock at a time and you want to do a big database of stocks, then Mathematica is the place to start. And so, talking back about like failed patterns, well, the version that we built out in Mathematica, it shows a lot of patterns fail and the returns are very high to the upside. And they're skewed to the upside. So a lot of the bottoms go up and a lot of the tops go up. And some of the bottoms go down. But if you want high positive returns, that's a good version to use. Now, take it a step further. In Stata, we rebuilt it again. And the Mathematica version will process about 33,000 stocks with 97 years of price history per stock in about 10 hours. The Stata version will do it in 3. And actually, with some of the updates that we made in Stata, Stata is also a standalone statistical package. So if you're not a very computer science person and you're an advisor or individual that loves investing or a high frequency, trader or active trader, you may want to start with the spreadsheet. And once you understand how it works, then I'll walk you through how to do it in Mathematica. And that'll include, a one-on-one call with me, a community to talk about it with. And when you feel more comfortable about it, then you can bump it up to the Stata version. And the Stata version, I'll include I'd say I'd include it in the intermediate course, but I think it belongs in the advanced course. And this version is the most advanced, and I'll walk you through how to use it, include a consulting call, and then have additional calls available, which I'll most likely just pre-record how to use it and walk you through how to use it inside the course. And then you can do everything in 3 hours. And then inside of there, you'll get, the top patterns that break to the downside and the bottom patterns that break to the upside. So in there, the returns do what they're supposed to do. But that will cover the advanced course. And beyond advanced, then it's going to be like your own custom application. Like, what do you want to do it with? You want to get patterns in real time and run them through the program. You want a data feed like TradeStation or Interactive Brokers or Yahoo Finance inside of Mathematica, or Bloomberg inside of Mathematica, or Bloomberg on its own. You want to get to where you can basically run this on your own application, whether it's individual stocks, whether it's stocks that pass the famous investors, whether it's stocks you're looking at to day trade and you're looking at it on a minute by minute basis to know when it's going to break up or down, or futures data. So that's what I'm going to go through in the advanced course, and then add some add-on products that would take you through like options, futures, how to do it. And then as I start to use it, then I'll allow you to start to follow it, but only once I've worked on it for a while. So, getting started in the beginner course, it's on pre-sale right now. Once I build it out, then it won't be on pre-sale. Same with the intermediate and same with the advanced. And, you go through all 3, then you'll be able to process your own stock data, and I'll be available to help you, start to use your own custom applications with it. So you can just do it in real time. And as I start to do it myself, then I'll allow a subscription like the famous investors where you can just follow and watch me do it. So that's what I have to offer there.